To the energy sector, where oil output is plunging. That's the result of steep cuts made by oil producers to help alleviate one of the largest oil gluts in a generation. Today, the price of domestic crude did rise by more than 1.5% to more than $53. But as Jackie DeAngelis reports, it was a much different story just 1 year ago.
The diamond bottom for stocks also happened to be a bottom for crude oil. This time a year ago, oil prices saw a low of near $26 a barrel. Since then, prices have more than doubled. What drove prices higher? Well, lower prices closed down a lot of shale production, which cut supply and pushed prices up. And OPEC finally announced a 1.8 million barrel production cut late last year. There were also doubts as to whether members of the cartel would cheat. That doesn't seem to be the case. The International Energy Agency says that OPEC has carried out about 90% of its promised supply reduction. So OPEC's supporting prices, and there are concerns that escalating tensions between President Trump and Iran could as well. Combine that with optimism over Trump's energy policies and a possible border adjustment tax, it all may be enough to keep crude where it is and slowly take it higher. But the shale threat remains real. Higher prices means that more of that production will come back online. U.S. rig counts were up almost 10% in January alone. Production in the U.S. has bounced around, and the numbers are now creeping up.
OPEC can't do very much more for much longer. There's not a lot of coordination. The Saudis are taking much of the pain, and they're going to have to continue to do that. Meanwhile, if prices go up a little bit more, shale snaps back in a big way. The swing producers here are the United States, ultimately, not the Saudis, not the OPEC states anymore. And Trump's policies are clearly favorable for cheaper production costs and therefore more production gains out of the United States. So on balance, despite all the geopolitical tensions in the world, I still think that energy looks more bearish than bullish.
If the shale players don't exercise caution, they could tip the market lower again. For Nightly Business Report, I'm Jackie DeAngelis.